Hello everyone. It is 10 o'clock and okay, hold on, let me okay, 1 second. Okay, let's see. Is there a way to take this one off? Okay, nobody's here yet. But anyway, just going to chill for a minute. Let me see. Let me play this one real quick because it's kind of indicative of the state of the market here. Of course, I showed this gentleman before. Hold on, make sure I'm on. His video is very well known, obviously. Well, sometimes his views just doesn't. What is it, man? Come on, baby. Lay down. Lay down. Lay down. Sorry, my dog's in here. Come on, Bella. No. Lay down. Lay down. Hold it. Lay down. Okay, sorry. Okay, so in this particular video, he was saying something about the S&P 500 just keep going up and up. What's going on, right? Does that mean bull market and all that stuff? Because I did a live stream yesterday and something, have some residual thoughts and all that stuff. And of course, I kind of want to come on here a little bit to kind of hang out and kind of like iron a few things, right? You see, my focus is obviously on Gamestop and all that stuff, but it's also important to look at the broad market, right? What's going on there, right? Because there was a lot of people coming in, would say certain things, and I'm like, well, this is what the media want you to think, right? About how, we're in the bull market right now. The reason why GameStop seems to have a price appreciation is because it's a shitty company, okay? All right, so that's a narrative that they want you to believe. But, and that's why, it makes no sense to kind of take a look at the price point, so to speak. Yes, it's important at what point do you buy GameStop at. Yes, whatever you're paying for, at what price did you buy into it, that matters as well. If you buy it at an overinflated price, of course you're going to have to wait a little bit longer in order to, kind of capture some of that money back, quote unquote. But that's the point of a trader, right? But let's listen to this real quick while I'm waiting for a few people to come in anyway.
Like the S&P 500, so already a divergence there. But then you take a look at, say, NVIDIA. NVIDIA stock looks more like a 1999.com tech than it does anything fundamental. And the rest of the Magnificent Seven look more like NVIDIA, leading the shares higher and higher and higher. In fact, Deutsche Bank analyst just yesterday wrote, the Mag 7's rise has left the S&P 500 at around its most concentrated in at least the last 100 years. Perhaps not since the bubble of 1929 have so few stocks had such high weightings to the overall market. And the bulls would say that's just a good thing. We have this new emerging technology that they're going to take advantage of and lead not just the stock market, but also the real economy into this robust, fruitful, take advantage of the best innovation type of future. And we all want to believe that. In fact, that's what investors are taught to believe. We want to believe that stock prices are high because the economy is going to be great. And we believe the economy is going to be great because stock prices are high. That's kind of circular reasoning. So how do we make sense of what's going on really with the stock market? Is there any fundamental arrangement or solid relationship with reality that we can say, yeah, definitively this is the case? And the answer is there is one very clear example of where shares and fundamentals are pretty darn clear, and that's Germany. Germany's DAX index, or stock market index, that too has been hitting record highs pretty solidly and consistently over the last several months. And when it started to get to all-time highs in December, this is what CNN wrote about summing it up. Germany's stock index opened at an all-time high Wednesday, again this is December, as investors' growing confidence that interest rates will soon be cut outweighs worries the country may be suffering a recession. In fact, the country it's not a question they may be suffering a recession. It has been a prolonged contraction going all the way back to the fall of 2022. Yet somehow, the DAX index, German shares have been rising to record highs as the economic situation in Germany gets worse and worse and worse. And what CNN actually wrote there might be applicable to more than just German stocks. Maybe the rise in shares, especially about the broader index, or what maybe we can see about the broader index, is more about perceptions of liquidity and rate cuts than anything having to do with reality and fundamentals.
There you go. That's kind of sum up what I'm gonna talk to you about GameStop, right? And of course, like price point works the other way too. When people missing price something, as something as shitty, you know, like when they want to label GameStop, it's always like it's a shitco and all that stuff, right? And you know, when he was talking about the price point, people were like, "Oh yeah, economy is doing well because the price goes up." Right? Like, that's counterintuitive because when the price goes up, regular people like you and me cannot buy stuff, right? Like, asset price goes up. What do you do? You can't buy a house and be comfortable in the future. And so, unless you was able to increase, you know, your wealth substantially on something, right? Whether selling at the top, just like Jeff Bezos has been selling, right? Where did I get it? Man, I should have. Oh, right here. Right? Whether you get to exit at the top, and I'm sure you know Jeff Bezos is not a dumb person. He's been in the hedge fund business before, and he knows what's going on. The fact that he chooses to sell it right now means something, right? Of course, the media doesn't want you to think that, right? And if you look at the price of Amazon right now, do I even have it here? If you look at the price of Amazon right now, it's all-time, right? All-time high. I was going to say all-time high. Close to all-time high. Right here. Right there. So what does that mean to me? Like, to me, that means he's getting ready for, you know, for the downturn. Maybe, you know, he missed a couple of percentage here, but a couple billions of dollars in share. I'm sure he's ramping up his shares being sold out of the market right here. Okay, sorry, 1 second. Hold on 1 second, you guys. I wanted to show larger time frame. No, let's go a week. There you go. So this one is an all-time high right there. And I'm sure, right now he's selling $2 billion, but he, in that article right here, Amazon stock worth about $6 billion was just sold by Jeff Bezos, right? And then just a day ago, Jeff Bezos sell more than $2 billion in Amazon stock for third time in this month. Okay, so 6 billion plus 2 billion, that's $8 billion worth of Amazon stock being sold into the market, right? To who? Well, pension fund, right? Your 401k. I'm sure the people that put into the 401k right now are buying into this. Is it on leverage? Perhaps. I don't know. Again. And then, of course, I can invest the video right here. I have an article about it. Why Jeff Bezos sold $6 billion worth of Amazon. Right? So my point is that, of course, this is just me, reading the headline. I'm just too lazy to get into why he sold. But, you could deduce the reason why. Because, hey, again, in my opinion, he knows the downturn is coming, right? Can this company grow further than that? Possibly. I have no reason to believe that the bubble is not here for Amazon, but the fact that the founder sold $8 billion worth of shares, it doesn't look good, right? For the broad economy, obviously. Where is he going to put that money to? I don't know. Perhaps, some sort of, treasury bond. I don't know. Again, to kind of preserve that $8 billion or whatever. Now, the reason why I said 8 is because 2 days ago this article came out. He was saying it says that he sells $6 billion. And then a day ago, So if you were to look at the filing, is there any filing involved? I don't even know. Insider. It's like, does he have any fund? Maybe Amazon. Hi, Mr. Gypsy Fish. Thank you for joining. Appreciate you. Hi, Lionel. What's up? Thank you. Okay, so if you look at the prospectus, benchmark, mortgage trust, can we see more people selling Amazon here? That's what I'm trying to see here. Recently. So if you look at this one, let's look at annual 10K. Okay, let me see on those. Oh, you can't even. What the hell? Okay, let me see this one. Amazon. $500 deposited total shares. But what is this though? It's not. Okay, insider. Maybe if I kind of do this one here. Which one is the insider? Annual report. Sorry, you guys. I'm looking for insider. Do we know? Maybe 8K? Try 8K. You know what? Hold on. Let me look at a different one here. So this is the only reference I have. So if you do insider trading, it's 4, form 4, there you go. Okay, 1 second. Form 4, what the hell? How do I... feel like they... okay, let's clear that. I'm trying to see how many shares does Jeff Bezos actually sold. Form 4 right there. Okay. Okay, so let's look at it real quick. Right here. Right here. So it's like back to back here. See the 13, 14, 15. And I'm sure he's been slowly, see, look, Jeff Bezos, been slowly shaving his position off. So you got Jeff Bezos, Jeff Bezos, Jeff Bezos, right? 3 different transactions here. Okay, I think I got the wrong one here. Shoot. Okay, let's look at the most recent one. Right here. So he's like slowly shaving off his position right here. So I'm sure that added to the amount of money he was able to kind of accumulate. So this is the price point in which he sold the shares. Security amount, beneficiary owned following. Common stocks. So SS means sell, right? Hold on. Represent the weighted average. So on average, he sold this position. So it's not, all in one go he would sell at this price. So, alright. That makes sense. So he did sell, but how much did he get from that? I think this is 1 billion, right? 100. What are these? Hold on. The amount of security benefit. Or whatever. Hold on. Am I looking at the right thing? So A 1,434 times this price right here. That's $13 million. Okay, so that's $13 million. I don't know where this number coming from. Is it the amount of shares he has still? Amount of security beneficiary owned following the report. Okay, so he have tons of shares to sell. It makes sense. I'm sure the media is they're gonna paint it that way, as if like, hey, he has way too many shares. Of course he's gonna sell. It doesn't mean anything about Amazon going under and all that stuff. Like, I'm not saying that Amazon's gonna go under here. I'm saying that, hey, perhaps he's trimming it off slowly because he sees other opportunity out there, right? My point is, he see a better opportunity elsewhere rather than Amazon here. Okay, just my thought. Perhaps the downturn is coming, right? In March, perhaps, right? In March, Jeff Bezos is gonna buy into GameStop personally, hopefully, right? No, I'm kidding. I'm just speculating here. Okay, how is your morning so far? Morning's fine. Thank you. Hi, everybody. Deadhead 2. I don't know what that is. Hi Jay, what's up? Thank you. Means sold shares. Okay. S means sold share, right? He see the bubble about to burst this year. Exactly. Yeah, I think so too. I think, this type of thing shouldn't be ignored. My thought is that, Jeff Bezos used to be a hedge fund person too, right? Like he was working for some firm before he went into Amazon. And I'm sure he understands what's going on in the broader market than any of us, right? And I'm sure he has inside information too. It's like, you think he doesn't? Come on. It's a famous thing where, well known, that, he sat on the board of the Pentagon or something like that, something related to the CIA and all that stuff. So I'm sure he has that inside information to know when is the top. And, when he resigned as a CEO, I'm sure he knew that the company couldn't grow any further. That's why he stopped being a CEO, right? And so that's my thought as well. So if you look at the filings right there, you would see he's been kind of shaving off his position 3 different times here that I see so far this year. So what is this one? Yeah, hundreds of millions of shares, millions of shares being sold right there. If you look at the back in the 2008, this is the price point that he exit at. If you look at the price right there, you see, and that's the part where I'm baffled too, because millions of shares being sold, right? But yet the price doesn't crash at all. It's can you imagine if GameStop? But again, look, the float is a lot higher, so I'm sure that's the what is the float for this company here? It's I'm sure it's 9 billion shares of the float. So 1 million shares of that is not gonna do much to the broad company. But honestly too, if they want to crash this company, nothing could stop them, right? Institutions gonna sell left and right, triggering that selling order. And if they could pump hundreds of billions of dollars worth of liquidity into this company, they could do the opposite as well, just as quickly. So don't be, to me, I think Manuel, I don't know if he's coming today, but yesterday he was saying it's wrong of GameStop to be declining in price while we're in a bull market, right? It's really? You think this is a bull market? I don't think so. There's so much fundamental thing that is happening right now that doesn't support that at all, right? I mean, just your personal life. Do you feel like you could buy more stuff or buy less stuff, right? And, the measurement of the economy is not what the stock market is doing. And I think this is what the media want you to think, is that, since the stock market goes up, that means good economy. No. That shouldn't be a measurement of good economy. I mean, if that's the case, back in the bubble of 2000, people would have been fine. Right, but we all know what's going on with the dot-com bubble. We all know what's going on with the housing crisis, right? When you have that type of bubble, which I think we're in right now, you're gonna see valuation that makes no sense whatsoever, right? We talked about Nvidia being $2 trillion evaluation based on the news media out there, right? They want you to believe that, and they pump it. They bring people in to try to rationalize the valuation, based on the company. And of course, they want you to buy into that, and you have people coming in. It's they make products. Okay, well, how much are they making? if you put, paper on paper, how much do they actually make? Well, let's take a look at it together. So last year they post $18 billion. Let's say $20 billion, right? So with that, $18 billion worth of sale, right? Net profit. I'm like, again, I'm not even talking about right here revenue. Okay, revenue again. That's money coming in minus the cost of revenue, right? Right here, goods and services, right? Just all the equipment and material and all that stuff that is needed to buy into, to make those chips and all that stuff right there. I'm not saying it's a terrible company. I'm saying it's overvalued, right? In my opinion, right? Why do I think that? Well, if you look at the PE ratio, it's ridiculous. Look at this. 95. Okay, well, I don't know. And if this company could be overvalued this egregiously, why not GameStop? That's just my thought. Hey, a girl could have an opinion, right? And then the forward is half of that. So that means, what does that mean? That's a forward guidance that people are looking for right there. They're guiding you down, but for some reason, forward guidance make people go crazy. It's like, oh, hey. And again, that's what the media wants you to think. And here's the thing too, look. I'm not making this up. Look at this. NVIDIA price target raised to $1,200. So they want you to believe that NVIDIA could justify what is it? Okay, so $2 trillion divided by whatever they made. I just said, what? $20 billion, right? It's actually $19 billion last year net, right? Can they sustain that? So that would make a PE ratio of 100, right? Instead of 95 as it is right now at this current price versus earnings, right? They want you to believe, oh, it's going to go up even more, 100%. To 100, and that's okay. That's justifiable, of course, because they make product. Okay, all right. Let's play that game. How far can they push this? I don't know. It could be $3 trillion for all I know, but you can't justify the valuation, and that's what the bubble is, right? Now, if GameStop gets to $1 trillion company, how much would you be able to appreciate from that, right? Of course, $1 trillion is an egregious amount of, bubble that you can't even fathom that. But even just $100 billion, right? 100 billion. Right now, currently, 4.3 billion, right? So with just $100 billion coming from that bubble, from pouring from that egregious bubble of $1 trillion company pouring into GameStop. Again, $1 trillion, that this is 10% of $1 trillion. 100 billion is 10% of and you think some of that money doesn't flow into GameStop eventually when they're posting every single thing correctly, right? I mean, a girl could dream, right? So, to me, again, money will chase a solid company that will do great things after all this bubble being burst. Okay? Now, all tide lift all boats, right? They call it, right? But when the tide comes down, you're gonna see who's swimming naked. It's a famous saying from Warren Buffett here. And so if you don't understand that, hey, that's on you. My thought is that, when this bubble bursts, that money, that, tens of billions of dollars that the big guys are buying into, or are taking out of the market, it's going to chase the market, or it's going to chase a better company that is going to survive this downturn, right? I'm not saying Nvidia is going to go under. That's not what I'm saying here. I'm saying that the evaluation is going to correct to the fundamental of the company, and this is why I'm so solid in my own thesis here, right or wrong. I think that the company that doesn't have debt, that has a good long runway based on the money that they have on hand, right? And then on top of that, you have good leadership, right? That is willing and able to, ride the wave, turbulence or whatever, and is willing to kind of steadily growth slowly, right? It's not a flash in the pan, so to speak, type of leadership here. And so this is valuable. Like, to me, this company is valuable. That's not to say that the price won't come down. Of course, that diminishing return, so to speak, that people keep bringing up has nothing to do with the company whatsoever, right? The price, again, people are going to panic, right? When the S&P, when the bubble bursts, everything's going to come down with it, right? Including GameStop. But just know that when the price comes down for this company, it has nothing to do with the fundamental of the company, okay? And I'm going to have to repeat that over and over again before people kind of like evaluate the company based on the price point, right? And we're being trained to do that, right? As a society, when we see the price of something, you think that it's more valuable. It's like, oh, look, Nvidia is going to be $1,000 a share. It's like, it's going to go up to $1,000. Therefore, it's the most valuable company ever, right? But again, they don't want you to take a look at the balance sheets itself. Like, what is the fundamental? Can the fundamental support a $2 trillion company? Well, I don't know. I mean, even today, Tesla, right? I'm sure it's a famous company that, retail was correct for a long period of time until, some of the retail investors, quote unquote, are billionaires themselves, or 100 millionaires themselves, because they believe in the company, right? Because again, nothing deterred them from believing in Elon Musk, right? It's the cult of personality. And so to me, in my opinion, just my opinion here, okay, if I were to compare Elon Musk to Ryan Cohen, I think Ryan Cohen has a better ethic, right? At this point in his life anyway. Perhaps he will become more egotistic, after he succeed in GameStop. I don't know. Again, people personality could change over time, because like I see the evolution of Elon Musk, right? How he's been kind of like changing over time, over this past decades. Before, I think back then when Tesla was very low valuation, I think he was more humble, right? It's like he's not there to kind of pump anything, like in my opinion anyway. You probably have a different opinion on Elon Musk. Of course, I don't know him personally, so I can't speak for that. Okay, let me read the short must flip long. Yep. How are they going to get all that money to pay I don't know. Maybe GameStop. Yes, all shorts are future buyer and must eventually close. It is inevitable. Yep, you're right. It's BS. Yeah, I mean, those type of thing, again, like you have to wait it out, right? Of course, it's fun if you're in this ride right here. I'm not knocking it at all, right? If I bought Nvidia, like, let me see. If I bought Nvidia at the bottom, right? NVIDIA. Right here. Yeah, so if I bought NVIDIA over here, of course, I'd be happy, right? Would I sell? I'd probably be selling over here. Like, if you 5x your money already, that's good. That's a good run right there. But yeah, if I continue to hold, I have a friend actually who holds. I think he's been buying since over here. $300 a share. I don't know if he's still holding. Maybe hopefully he's considered trimming some of that position, but I don't know. I haven't talked to him in a while, but yeah, I wish him the best. I tried to tell him about GameStop. Of course, he's the type that it's very hard to convince him to do something. So hey, to each his own. Like, right? If you don't see the value of something, it's hard for me to kind of convince you otherwise. But my hope here is that to kind of shed some light on the perspective that I have on the media and how they are portraying a certain thing as valuable. And when they want you to buy into something, they would present you like this type of news, right? This is Yahoo Finance, and then this is Bloomberg, obviously trying to get the Sam Altman guy, the AI CEO, saying that he's gonna make a $7 trillion company, right? It's ridiculous. Who's going to give them that money? Is it the government or some private sector? But even that, it's ridiculous. Like, who's going to have the money to buy those? Like, you don't even have the companies to compete anymore. It's all monopoly. It's all control of narrative here. But at some point it's going to come crashing because people are not going to believe the bullshit anymore, right? There you go. So this guy, let's listen in.
Maybe Kevin Green's with us to think about NVIDIA. All right, KG, this is what it's all about. This is why we wake up in the morning. This is why we're all here in the year of our Lord 2024 to watch the singularity built by NVIDIA. What's up, man?
Yeah, we're going to be focusing on the forecast moving forward. Obviously, that's been the driver for the stock over the last couple of quarters. And even though we might see a nice little beat on both the top and bottom line, I think it's that backlog or the order backlog that's going to be the key area here that the market's going to be focused.
Oh, order backlog. Oh, okay.
Revenue projections right now sitting at $20.18 billion. That would be a 235% increase around there, increase on a year-over-year basis.
Wait. What did he do? What is the forward guide in here?
Area here that the market's going to be focusing on here. We actually have the revenue projections right now sitting at $20.18 billion.
$20.8 billion. Okay, $28.1 billion. 200%? Okay, all right. We'll play that game.
That would be a 235% increase around there, increase on a year-over-year basis, and the adjusted earnings per share estimate is sitting at $4.52, over 400% increase on a year-over-year basis. And why is it that the case here, Oliver? Obviously, it's going to be data centers. It's been the GPUs. We talk about it literally every single day here. And the data center business now drives around 80% of its total revenue. If you look at fiscal year 2024 or 2022 in Q4, it was only about 42%. So even if the other segments are weak, data center is what's going to drive the growth here in the near term. We also have Loop Capital initiating coverage on the stock.
In the near term, like, okay, can they produce this in a year? All right, we'll see.
Here with a buy rating with a new price target of $1,200 here. They do believe that we're at the front end of a 3 to 5 year graphics processing unit cycle here, and they believe that there's still material upside when it comes to the earnings estimates for NVIDIA for 2024 and 2025. They do acknowledge that competition is coming in this space, but they believe that the big players, the big customers for NVIDIA are going to stick with them and continue to buy these chips at a healthy clip, and that's why we continue to see a lot of upside movement when it comes to the stock, a lot of speculation coming to the stock here, and if it is able to deliver, maybe we can sustain this rally in the near term.
All right.
Oh, maybe we could sustain this level. So understand this, right? Again, like I'm biased towards these type of media coverage here because, again, I know how they're twisting it against GameStop. Every time we're doing great, beating earnings, expectations, estimates, time and time again, 4 times in a row, right? We all know this. They are still being negative about it, and now it's about forward guidance. Oh, maybe because Ryan Cohen doesn't care about an investor, therefore nobody wants to invest in this company, right? That's what they want you to think. But for this particular one, even though the forward guidance is 28 next quarter, Really? What is it? Thursday? $28 million warrant a price evaluation of $2 trillion company. And they want you to believe that with a straight face. Look at that smile.
All right.
Look
Next
at
week is shaping up to be the biggest of the year.
What is this? Look, what a serious tone, right? Every time they want you to do that, spend money on some company that is overvaluated. This is what they do. 20 right here. Revenue estimate for this coming quarter, $20 billion, right? Now, $20 billion will put at this price point, right? Let me see. Did I do the math already? 2 trillion, sorry, 2 trillion. That number is just so mind-boggling to me. Divided by 20. This is the PE ratio that they want you to believe that this company is gonna get into, right? And I'm sure they're gonna pump it. They're gonna pump it, getting more people excited about this company, right? That produced, product worth $20 billion. All right, we'll play that game. Sure. Okay, and then what else? Let's see. Okay, beating expectations and all that stuff. And that's another thing too. Who has the money to buy into this chips, right? And what does that chip gonna cost people who wants that AI machine, right? And I'm sure, again, this is the nature of bubble, right? AI bubble is that, they initially get you to be so excited about the future, the speculation, forward speculation of things, and kind of glossing over the reality of things, right? The reality is that NVIDIA only make $20 billion a year. Oh, is it a quarter? Sorry, this is 1 quarter. Let me do the trailing 12 here. So, right here. Yeah, this is a year, you guys. It's not a quarter. It's not a year. It's not 1 quarter. It's not, 6 months here. It's 1 year. Previously, they only make $4 billion net income. This is net income, of course. Like it's like an overall thing here. Let me see what is their retaining earnings real quick. Retaining earning. Wait, hold on. How's everybody doing today? Retaining earnings, $20 billion. So far, of all the life of this company, okay, they make $20 billion so far. Okay. Can they make more? I don't know. The estimate earnings for this quarter, it's going to be $20 billion. So they're gonna, the news is saying, the speculation is that they're gonna make double that. Yeah, a life of the company. I don't know. Hey, maybe the government is spending on those chips. Who knows? I don't know. Who's ordering it from them? Right? Maybe that's an accounting trick again. That they have. Hold on. Let me see if I could find that one. There was a maybe it's last 2 quarters or so. Let's look at that real quick. So 2000, this is recent one, maybe 2 quarters ago. So 10% of the I'm trying to find the phrase that they use to describe the revenue. The representation. Fiscal year. Maybe I should look at. Sorry, you guys. I should have this. Okay, term revenue. Expenses. Including those related to revenue recognized cash. Cost of revenue. That's income during the second quarter. Inventory position approximately. Oh, they call it deferred revenue. There you go. This is a liability. Wait, deferred revenue primary include customer advance and deferral related to licensing. Wait, during the first quarter, cost of revenue for the purchases obligated. Where did I read that one? What is a deferred revenue? It's coming in, primary including customer advance, deferral. That's a long-term liability. I need to read up some more about the deferral revenue. Deferred revenue during recognized during this period, about $500 million. Allocated the remaining performance obligating in the future period. We expected to recognize approximately 40% of this revenue over the next 12 months and remainder, therefore, this exceed revenue related to performance obligated. I think it's this one right here, but yeah, I need to understand this myself because and then of course they have senior notes here, right? Bonds, long-term debt, and all that stuff. So this is gonna come into play. Currently, of course, they have great valuation. Hopefully, they would get rid of all of this debt with the evaluation if the leadership is smart, right? So these senior obligation notes are, levels of debts here. So currently, there are long-term debt is around $8 billion. So they did pay off a little bit. $8.4 billion. So yeah, they have freaking debt over here. While you have a company like GameStop that doesn't have any debt. Right? This is 2 quarters ago, so I might change the reason why. But anyway, I need to read up on this and I'll come back to it, but I don't want to waste too much time. Because like this, the title is GameStop, right? And I'm talking about NVIDIA. So let's go back to GameStop real quick. Okay, sorry. Ooh. So I was kind of following what GameStop posting so far, and it looks like they're showing engagement, right? Ever so often you would see stuff like this being posted, and just trying to engage people to play the sport-based games over here, basketball. And yeah, maybe there's a tournaments coming, right? Who knows? Promoting the Candy Con, perhaps, right? Candy Con. So there are people are gonna show engagement in that. But again, hey, you build the company from the ground up here, so it might be taking a while for people to realize, some value in here, in here. And of course, like, there's big titles coming. I saw like pre-order is available over here, right? I know yesterday when drop and people who are against this company keep saying, well, nobody needs the product that GameStop is offering. Well, that's not true, right? I don't think that's the case. There are people who buying this company, pre-ordering it. They have memberships, right? How many membership that they have? If you look at the balance sheets, okay, let me look real quick here. Let's get rid of this. I keep forgetting to. Let me see. So this is quarter 3, right? Quarter 3. Is this the most recent one? Sorry, guys. Okay, this is the quarter 3. What am I looking for? I'm looking for... What did I say I look for, you guys? Sorry. Oh my goodness, I lost my train of thought. Oh, membership. Pro member. Oh, am I spelling it wrong? Procedure, property, profit. Okay, products. Maybe membership? Let's try membership. Yeah, members. How many? Retail net estimate. The estimate retail point in the redeemable membership. Okay, so how many contract or... Okay, so contract liability begins balance $300 million, increased in contract liability, $500 million, decrease. Wait, 500 million or $1 million? Hold on, let me see. Trade-in, royalty, gift card redeemable, outstanding. I wish they gave you the number. Maybe I'm just blind. Fair valuation. Hold on, let me see. Foreign. Okay, so contract liability ending. So we still have 200 left. So our contract liability primarily consists of unredeemable customer liability and deferred revenue associated with gift cards, extended warranty, and prescription to our pro membership. So that comes out as a liability, those gift cards and all that stuff, but people give that money to you ahead of time in order to redeem it later, right? So we still have $268 million left, but I'm interested in how many members are in the pro membership, right? So that's what I'm trying to look for here. The point of that is just to see what an idea of how many people are interested in, being a brand loyal to GameStop. And of course that number will change over time. But it would be nice to see that. Unless I'm so blind that I'm unable to see that. I think this is in dollar terms. Right? Unredeemable, extended warranty, subscription. I think this is what it is. Subscription is for $41 million. Yep. And millions expected unaudited. So I'm thinking it's this one, but it's expressed in dollar terms. Subscription. Yeah, but anyway. Whew. My eyes is watering. Okay, so let's see. I feel like this is the most boring live stream ever, you guys. Thank you so much for kind of sitting through that. Let's see, what did I want to show you guys here? Of course, they have what is this, discount or whatever. People are right here. So they have pre-order, available for you to pre-order this. Product that people doesn't want, right? In GameStop, of course, they have amazing selection, right? It's not right now, obviously, but this category could expand eventually. Pre-owned, whether it's PC components right there, right? They could expand this catalog more and more as they know how many people are going to be shopping, how much inventory they're going to have to need on hand, without kind of storing something without being sold. I'm sure the high turnover of products is going to be essential when it comes to kind of how much product can you sell each year, which season makes more sense to kind of load up on the inventory, so to speak. Those things is being considered. I bet you anything, right? Because that's how management have been able to kind of turn in the profits. Turn in the product to the customer, right? And delivery, as what Morans was saying about how, when you get the product from the manufacturer to the business and then to customer, right? B2C. We're B2C, meaning business to customer. And so it has so many moving parts there that needs to be ironed out. But again, you have the best operator right here in front of you. This is the leadership that you want to support, in my opinion, right? And so those things are coming into play in the next few years also. And again, price doesn't really matter at this point in time, because it could be undervalued for a long time until people realize that this company is actually valuable. The same way, like if you look at the company back then, let me see, GameStop, back over here. And people think that it's over and all that stuff. Like, okay, that's on you. You think that? But let me go back here real quick. And I've talked about this before. This valuation right here, this is when DFV, kind of saw the value of GameStop before Ryan Cohen got in, right? And that's the valuation. I mean, that's a value added, right? Of course, Ryan Cohen is a big part of why this catalyst, this is the catalyst. Ryan Cohen is the catalyst back then, and he wasn't even a CEO. What he did was, just being the board of director, was able to kind of clean up the board of director that were, there to make companies better, right? We all know the story, and if you haven't been in here, kind of like somehow, kind of stumble upon this video, this live stream, the most boring live stream ever, is that, when people misprice a certain things for so long, and again, this is how many years is this? When GameStop experienced that downturn, that price depreciation, diminishing return, so most people would say, that's 1,000 days right there, right? So from 2018 to 21, close to 21 right there. So it might take you that long. It might take people that long to know how much value is in this company, because the narrative is so strong about GameStop being the shitty company, leadership is terrible, right? And again, this is like, perhaps they were right because they were planted there, right? Of course leadership was terrible. Of course people doesn't want to work at GameStop at that time, right? And so if those things are correct for decades on end, right? But here's the thing, people don't realize that, I'm sure right now, if you go to like regular people and talk about GameStop, they probably have the same narrative, the same entrenched narrative. And narrative is important when it comes to kind of pump up the price action, right? So you are in a time right now, if you're in GameStop, you're going to experience this narrative over and over and over again. They're going to beat it into your head. But for people who actually believe in the company, believe in this leadership, you have nothing to worry about, right? Because the price action, again, psychological, right? Very psychological, and this is why they always go to the price action. Look at the price, look at the price, look at the price, right? And so my goal is for you to come to this right here. Look at the balance sheets. That's what you need to be, worry about. Because this is more like, eventually fundamental will reign supreme, right? I don't know how long it's going to be like this, but I could promise you that if I see quarter after quarter, okay, GameStop is doing the right thing, right? Trending in the right direction, doing the right things, whether, trying to, be nimble, right? Cutting down cutting down hours, making, the employee happy, at some point in their own way. I'm sure, if the economy is turned down to be a really bad one, right? In recessions, people are unable to kind of put food on the table at some point. GameStop is going to be that place to where it's going to feed people, right? Put food on the table, hopefully, right? That's what I'm thinking. And so, people are going to flock into, working for the greater good of the company, right? And just so happen to be an investor in it, right? So there's nothing wrong with that in that sense. So when people are, coming over and say that, hey, we're demanding this $50 an hour or else, right? Okay, you can't demand that. If the business couldn't generate that much, then it makes no sense to pay people $50 an hour in order to do whatever, right? And so I think eventually, again, people are going to be a lot more aware of their situation, and if you are desperate for a job, any job would do, just to put food on the table, right? I hate to say it that way because, you know, we all deserve to live in a better light, or a better, you know, a society, better everything. But it just, that the way that the world is working right now, it seems like the people that are scamming people, like, you know, seems to reign supreme at the moment, right? But eventually you're gonna run out of fools to scam, and people are more aware of this type of segment more and more now, right? Hopefully. But my hope is that there is a different class of investor out there that will be aware of what's going on in the broader market, and that you're not going to be fooled by certain, you know, entity that wanting you to believe that it is a good market to be in. Currently, you know, you have CEO out there right now that are, you know, exiting in droves, right? It's not like just one-off transaction here. There's 3 different transaction here that it's already been kind of in motion. And so, yeah, I think the bubble is near. Come March, when the Fed is not going to cut the rates, we're going to see how much of that is going to be true. You know, they've been expecting rate hikes since November, so to speak. So now it's close to March, which is the decision. I don't know. Perhaps the Fed is going to keep the gravy coming until they can't anymore. Then we'll see. We'll see how it goes. But my thought is that, you know, everything's going to come down with it as well. So just be prepared for that. And, you know, that's why I'm here. I'm here to kind of like give you my thoughts and opinions on that stuff. Because I'm in here too. So. Alright, guys. I guess I have no opposition here. I'm kind of, you know, speaking echo chamber. Echo. Can't even say. I'm just, what is it? Echo chamber? Winthrop is boring when he comes in. It's boring. What? I don't know what you're talking about there. Okay, no, you're not boring. Okay. Thank you. But yeah, I feel like I'm speaking to the choir here. But I hope you learned something. You know, I think all of these companies that is being put right in front of you are severely overvalued, in my opinion, obviously, right? And so if these type of company could be overvalued, eventually GameStop's going to be overvalued, severely overvalued as well. That money is going to chase GameStop, right, at some point, because GameStop is fundamentally sound. When shit hit the fan, right? Forgive me for saying shit, but when everything comes down, you're gonna see which company is gonna be more valuable. And my thought is that money is gonna chase the best company out there. And what is the best company? Just like I said before, let me close this real quick. No debt, right? Have cash on hand. Great leadership. Great industry to be in, right? The fact that they sell refurbished stuff, right? When you have no money, think about it. You're searching for bargains, right? And there you go. That's the selling point right there. I mean, how many more can I count on my hand right here? So those are the 5 reasons that, you know, you might want to kind of consider GameStop, you know, in your portfolio. If not, just wait. You know, wait until everything come crashing down, and, you know, maybe add more, or at least kind of put GameStop company in your watch list. If you don't want to invest right now because you think it's overvalued, then wait. You know, to me, I think it's worth everything. Worth a lot. Look, they actually make money. Like, people come here yesterday saying that they don't make money. It's like, what the hell? How is it that they're able to say that with a straight face and not really considering what's going on here? You know, so to come from, this is free cash flow, by the way. This is free cash flow. And so if you look at right here, hold on. So trailing 12 free cash flow, 400 million loss right there. So 500 million loss, right? 700 million loss, right? Right there. 800 million loss. 400 million loss to come out of that. And then now you see this. I hate it when I can't even move over there. But anyway. So, hold on. 1, 2, 3, 4. Okay, so 2021, they spend a whole bunch of money, right? But again, like, keep in mind too, these type of cash burn, quote unquote, is them paying off debt, right? It's them trying to build a platform. Yes, cost some money, but I mean, how much did we actually cost? I mean, hold on, let me see. Let's look at the shareholder equity, because that's going to be the best kind of gauge of how much asset we actually, you know, use within that time frame. So currently we have $1.2 billion right there. What is the highest one? Right here. So this is the highest, you know, shareholder equity that was there since Ryan Cohen got in. So, because it's only fair, right? Because if you want to evaluate the company right now, you have new leadership right now that, you know, got in when we were in a massive debt, you know, and all that stuff. So let's subtract that from the current shareholder equity. Right, that's $500 million, right? Being burned, you know, I have to put that on quote because that's like, again, and then of all that $589 million that is being lost from the shareholder equity, what did they use that for? They paid like close to $400 million, right? In debt, maybe 300 million something. I don't know, I didn't look at that, but if you kind of go back to the previous, you know, years or so. So let's say $360 million being paid debt, you know, debt-free, long-term debt-free. How do I know that? You know, I've shown it before in an investor relation. They detail that, you know, very well. You know, you go back to 2021 and then they would tell you that they use those money that is being raised through shareholder, right, from selling the share at the market offering at the high valuation at the time, and they got $2 billion, close to $2 billion from that, $1.6 billion, and they use it to pay off debt. So of all these 3 years that Ryan Cohen has been in, he's been burning, quote unquote, $200 and something million right there. 200 something, 3 years. And that, I bet you anything, most of it, it's, you know, the NFT marketplace and all that stuff, right? And so, hey, some business has to go through that cycle in order to, you know, but again, they still have billions of dollars in the bank right now to, you know, have a longer run into the future. And so if you don't see that, I don't know what else I could tell you, that the you know, management is doing well in that sense. And if you don't believe me right here, look. So this is when Ryan Cohen got in, right? Look, I know, you're going to see the trending down right here. And so from here, it's like it used to be like of all of the business, like the retaining earnings means, here, let me look at the shoot. So returning earning when Ryan Cohen got in. Okay, Ryan Cohen got in as a board of director over here, I think. Close to here because he wrote, the letter at the end of 2020. So 2021 would be a better assessment on things. But if you want to go back, a quarter before that, this quarter he wasn't in the company, right? And so let's look at the current debt. Current debt at the time was this much right here, right? 374, sorry. Long-term debt 600 something, right? 374. I wonder. Okay, good. So if you look at that line right there, shit. Okay. All right. So this is when he had more money from the shareholder. Right there, raising dilution, quote unquote, right? From the delusion that people keep saying. It's delusion and dilution all the time. And so, okay, so that line right there. Okay, so it used to be 374. Now it's that. And then used to be 600 something. Now it's 400. Right? So that shows me something. It shows me that they are paying off debt, right? No long-term corporate debt, okay? And we have a negative returning, right? Because of that, because we pay off debt, right? And also too, we use some money to build that NFT marketplace. That people, quick to judge that it is a failure, right? But hey, they need to try something new. If it's not working, try it again, right? That's like a nature of trying new things in order to get to be successful. How can you become successful if you don't know how to fail, right? And if you fail and you just stay down and not really doing anything else, then you're not really growing as a human being. Business is the same way. How many blips in in business cycle do you think is going to happen before? I'm sure Apple tested out so many different products throughout the decades, to become successful in what they're doing. So with iMacs computer and all that stuff, it needs to be tested. So yeah, I think that's all I have, you guys. Oh my goodness. I feel like, let me see. Oh, hi Smarantz, what's up? I fell at everything before Costco stock. Yes, of course, Smarantz. When I watch your live streams, I'm amazed at how many people don't realize failures. To me, failure is within the psyche of human, right? And successful human, anyway. Because to be successful, you have to fail. You have to. Because failure, you could learn so much about yourself, about people around you, about how well can you deal with how well can you cope with what is going on around you too. And so those are valuable lessons to learn, and you're a good testament to that. Honestly, every time I watch your live stream, I'm like, oh my God, I feel so motivated in a sense. So again, and I think, investing in this company is kind of slow turning, and I'm becoming, it makes me feel like I'm more well worse in the broader market, right? It teach me a lot more, in a sense, like it's more stable in the growth of my own investing career here, which is very small, when it comes to, like, I've only been in the stock market for like a couple years, maybe 4 at most, because before that I was in crypto, right? I got my training in crypto, and so that's a different type of battleground, right? And that's why I always equate it to the stock market in terms of the company itself. It's much slower growth than the crypto markets out there, and this is where I evolved into, right? Because yes, in crypto you could make a lot of money in a small period of time, like a short period of time, but then coming to this particular company, it teach me how to evaluate the company based on the fundamental, right? And this is why your channel is so important to people, like people like me who's just here learning, right, about how this company being evaluated, right? And why is this the media? Why is that the media doesn't want you to see that, right? And again, like for me, I look at the number and it makes sense to me, right? And most of it due to your channel is that, when you do the balance sheets on AMC versus GME, it's like in night and day. And this is where, it turns my eyes into like it turns me into, looking into Brian Cohen at the first, like the way that I got into GameStop is Brian Cohen. That's one and most foremost, the most important things that I took into consideration was Ryan Cohen, honestly. And then second, balance sheet, just like you said. And then, of course, kind of growing pain of holding something for because of your conviction in it, right? My conviction as well. And I hold this, again, like, you didn't, like, really convince me in a sense. Your channel, because of your dedication into, like, covering this company even before people think that it's valuable, right? At the valuation of like $400 a share before the split. And people keep pointing that out. Oh, look, when you buy it $500, right? But then they don't really understand, like, hey, people are dollar cost averaging down. And so those dollar cost averaging down is a strategy that investor are going into, right? Because they believe in the company in the long term. And you don't have to, like, put thousands of dollars every single day in order for you to make it rich or whatever, struck gold or whatever. And again, like, most people don't realize how $100,000 worth of, gain, it's still a gain for most people that they can't even imagine, right? When I made my first $100,000, it was like, that's worth everything to me, right? Because, like, how can I make invest in crypto at the time, and I didn't make that much, for what I do. But I started with like $7 a week, right? It's like, I'm not joking. $7 a week, and I just keep stashing it away. But at the time, I was like more into crypto, like I said. So I believe in Bitcoin at the time. I believe in Ethereum at the time. And so I had the high conviction in that. And, to come from that end and then knowing how, hey, this is the value, is that when you know something, right? I knew about Bitcoin 4 years before that when I kind of developed the strategy of, dollar cost averaging down. And those are, valuable as well. And people don't realize it because, again, the media is pumping you this bull crap, right? NVIDIA, $2 trillion. I don't know if you were in the... Sorry, you guys. Hi, Marantz. I've been in for 20 years, but I started buying individual security in 13. It's been 11 years. Okay. I learned a lot. I learned a lot. Jimmy is everything I wanted to be. Of course, yes. I wish I have that, experience in the market. Well, due to age, right? Well, let's see. I'm a couple years behind you. I think you're 40s, right, Marantz? So I have maybe 6 years behind you if you're 40. I'm 36 right now. No, 36, sorry. 34. I don't even know how old I am. Yeah, so that's why, I'm not in a rush. And knowing about the Roth IRA too is kind of like a very eye-opening to me, because before that, 4 years ago, I didn't know about, the different type of vehicle in order to kind of tax advantage ones that people don't realize how amazing it is to not have to pay tax. And then the long-term capital gain angle of things too, that's like huge for me to kind of like, hey, there are ways that you don't have to pay more taxes than the rest of the people. I know, like, paying taxes is part of it should be anyway. It should be a patriotic, patriotic thing to do, right? And it should come back to that. But for some reason, companies are able to get away with paying taxes, and for some reason, people pump that, right? I disagree with how Amazon gets to not pay tax for a long, long time, right? At some point, for some reason this year they pay more taxes than they used to. But at some point I saw it was like 4% or something tax. And so, there's certain cycle that businesses could do a tax write-off. But I think there should be a different way to, I know you own a lot of business, you do Costco at a high level. You might have a different perspective on that, but as a person that never run a business before, I don't know how tax incentive works in a high corporate level. But to me, I think it's a bit unfair. At the very least, tax the corporate, not corporate, the executive that have the like Jeff Bezos, for example. I bet you anything, this billions of dollars that he just sold out of this, security, will not be taxed. I bet you anything, right? So at $6 billion, right? If I make that $6 billion through my income, capital, not long-term capital gain, but short-term capital gain, I would have to pay at least 40% of that, right? Or not 40, 30% of that, right? But I bet you anything, he won't pay 30%. Probably more like 20% of that $6 billion will be. But even then, I'm sure he has his offset, kind of loss to offset that tax. And that tax is never going to go to, to the betterment of the society, in my opinion, right? But again, that's just my schmeal here. Makes no difference to me, but speaking of tax advantage thing too, it's like something that people need to learn about more and more, and me learning about it, that's why it's kind of give me a hope of the future, right? Because what I do for a living doesn't give me I could survive, because I have very low expenses. I'm okay, but my goal is to help my family, right? To help everybody around me. So that's why I focus on my finances more, because that's the best way to help people, in my opinion. Not just to throw money away, it's just the ability to help your family out when they're in need. I think that's what I'm here for. Right? It's like, hey, at least it's if you need a couple hundred here and there, I got it. I got it for you, type thing, right? And so my purpose is here too is just to kind of seek through this company and see what's going on. What can I do with this company, and how can we support people like Ryan Cohen? And it's, again, to me, it's larger. Like this company is much larger than anyone could imagine. It's like the principle of things, right? The ethical business practices that we need to come back to, right? That you don't have to screw people over in order to be rich, right? And be supported. That you could win just by doing the right thing, right? That's pretty valuable to me, right? This is the type of business that I want to support. That, you know, you don't have to do trick accounting in order to make your company looks better than it actually is, right? I don't know if you heard this, Marantz. What is it? NVIDIA, and there was another company. Hold on, I don't know if you, before you go. Is it CSI? Supercomputer or something. SMCI, I think. This one right here. So 4 years ago, there was an article in the SEC website stating that the current, the CFO at the time was misaccounting something, right? They were doing accounting fraud, and then all they had to do was just to pay fines, right? $2 million fine or something like that. But what they did was they were accounting goods and services that they would just randomly send to people and account that as a profit, right? And so, of course, the SEC found that out and fined them. And the CEO at the time was in charge then, and that was like 2020. So 4 years ago when they did this. And so my thought is that I don't think they're going to change their way, right? If they get away with doing that, you know, and nobody went to jail for it, right? Why not do that again? And so that's why, you know, the net profit balloon, and it makes no sense whatsoever. You know, where did they get that revenue from? And, you know, the news was saying, hey, NVIDIA was the one that kind of interested in their product and all that stuff. And yeah, perhaps that might be true. But NVIDIA is overvalued as well, in my opinion, right? And so, you know, every tide lifts all boats type thing. And then when the tide comes down, you know, you get to see who's swimming naked type thing. So. Hello Marantz, I'm a huge fan. Okay, hi Benya. I don't understand why you would even hang out in Jimmy's circle. You're a fake friend and fan. I own Jimmy. I like the stock. I don't know, like Marantz, like Manuel has been in here for a while. Windrop. From time to time I see SpongeBob in here as well. And so, you know, it's not like, I don't know if they're friends or foe or whatever. To me, none of these people really convince me to not hold Bitcoin, not hold GME, right? In this channel, though, I usually babble on and on about just GameStop and how great it is, and also, too, how, you know, the media is treating other company versus GameStop. And you know, that's my angle. Is there? It's the media side of thing. You know, I'm trying to learn how to kind of deliver my message a lot better, and I feel like I'm getting a little bit better in public speaking. I know when you're here, I'm kind of like nervous all of a sudden, you know, because I looked up to you in the way that you're speaking, the public speaking aspect of things. I would be so. At some point, I'm gonna, you know, try to get to your level, but that's probably not gonna happen. But even half of what you could do is amazing too. But you know, I'm here just for the public speaking of things. But as far as these people coming in, you know, Manuel hasn't been. I feel like he's kind of on the fence, right? Yes, he said that he's owning AMC right, GME right here. Sorry, 1 second. Yeah. So as far as manual, I don't know. I'm not convinced. But again, like if he said before that he was a kind of index, right, manual. You're more like a short-term speculation on a small portion of your portfolio, but you're more index investor, like more diversified than just individual stock picker, right? So which, hey, if that's your strategy, you best. I know me best, right? And so that's the most important thing too, is like to know who you are. What type of investor do you want to be? What type of trader do you want to be? There's different types of traders out there. Day trader, you have a swing trader, you have a, decade swing trader. And so, whatever floats your boat, whatever your time horizon is, that's on you. And then, if you could do a mixed strategy, that's also a good strategy to do. That's kind of like what I am as well. Yes, I have my long term, my my Roth IRA, my 401k, and then on top of that I have my midterm swing trade, so to speak, security that I hold for a couple months, and then hopefully you sell at a higher price before you buy into a lower price, right? And then I have my small speculative option too. So again, like I'm combining. Again, the purpose of this is me learning about the market, how at least to try to beat the S&P 500, right? That just my aim is. But as far as like the long-term portfolio, currently I have maybe 50% GME. 50, because of the nature of because I just started my 401k kind of like, when was I in the job market? Very recently, actually. I'm a late bloomer in that sense. Let me see, when did I start? 2017, when I started to kind of, set up my 401k. And so I've been putting just a couple percent here and there. Sometimes I put more based on my, my income, my regular income. So I kind of like play around with that. The most I've ever put away was like 20% for my 401k. And so of my income, of course, it's very low, compared to most people. But, with that account, I did accumulate pretty well. And one other thing too, I was like kind of have the ability to kind of like switch to large cap, like there's a basket that I could pick and choose, and I did pretty good on when I kind of rotate into certain things, so that's why my portfolio kind of grow faster than the rest. Currently, I'm all in money market account right now because I'm waiting for that. Drop to kind of drop. So that's where my 401k is at, treasury market and all that stuff. I'm kind of waiting on the, Janet Yellen to kind of sell that $10 trillion worth of treasury first, and then I could kind of jump back in, like in a couple months here. So I don't know. I'm just waiting for the market to crash, but it hasn't been. So I don't know. I might be missing out on the gain over here, but I don't care. Again, the 401k, I have 30 years to kind of grow from that too. So keep grinding. I'll explain manual later today. Okay, thank you. Appreciate you. Not now. Don't ever hitchhike the chat. Don't wanna hijack the chat. Okay, thank you. I appreciate you. Yes, exactly. Okay, menu. I'm kind of at the end of it too, so if you haven't been kind of going on. But let's see. What was I? Let me close the closing remark or whatever. But I went off a tangent here. I don't know. Eventually, I wanted to kind of do a lot of explanation on the option, right? I want to do how the Roth IRA works, right? And I'm sure like there's so many, explanation on the other people probably could explain it much better than me. So you might be well off, just to watch those people. But what I could do is just steer you to the right direction, which information that I use for my personal self to kind of learn more about the market here. As far as the plumbing of the market, of course, who knows? Like even the expert out there couldn't really tell you, right? Because again, it's very opaque, very complicated. There's so many moving parts out there. If you want to try to explain like just the price action of GameStop alone, it might turn you crazy, right? Because again, like I don't know why the price keep dropping, but what I know is that the balance sheet tells me a different story. And so if that's the case, moving forward, decades on end, so be it. I'll be here. Hey, like I said, I have 30 years, right? Before I cash out of my retirement. So I'm good for that. And as far as like I get a income coming in, that's, number one is to survive this hard time, right? Number two, to not get in debt, right? Number three, to keep grinding. And even though there's, good times, bad times coming your way, just know that you'll be fine, right? The best thing you could do is to survive in this environment. So that's all I have for this one. Again, thank you so much, Morans, for coming in. Thank you, everybody. Lionel, Jay, somebody else before that, I forgot. Deadhead too, I don't know who you are. And then Mr. What is this guy? Gypsy Fish. Great name, by the way. Alright guys, that's all I have. Okay.